Hey there, and welcome to Real Investment News. I'm Mike O'Neill. We don't normally do actual market updates in our reports that often, but there are big movements today that you need to be aware of. As you've probably seen, the markets are suffering more big losses today after China announced its retaliatory tariffs against the U.S. But right now, the Dow is down more than 2.6%. The Nasdaq is down 3%. The S&P is down 2.7%. You know, we have actually been watching the S&P for a long time, and I'll show you why. It's because today it has fallen below the 200-day moving average. This is the 50-day, the 100, and the 200-day. And the 200-day had been serving as a really big resistance level for a while, but now you can see what is happening. It has broken south, and the question is, how far will it drop? How far can we tolerate it dropping? Now, take a look at this chart, and you have to remember that we are following two major trend lines in the markets. The first is from when this bull market started in 2009, which is this reddish line that you see here. The second line, the accelerated trend line, this actually began early 2016, and you can see how far the two have separated over this amount of time. Now, this suggests that if the S&P were to fall another 300 points, down to about 2250, we would still be in our original bull market. But that is a lot of downward momentum, and we don't want to see that. Another thing that we are watching closely are the bond yields. Now, this morning, the yields for the 10-year Treasury, as you can see, jumped up to about 2.77. Yields for the 2-year and 5-year jumped as well before starting back to where they began. And the question is, why is this happening? Well, initially, they were climbing after a new round of economic data, but now that investors are trying to put their money somewhere safer, the demands for the bonds go up, and consequently, these yields are starting to go down. Even more interesting is how the spread between the 10 and 2-year yields is getting smaller and smaller. This suggests that some investors want to lock in their money for longer, an indication that they feel that some of these downward trends could continue for a long time. And as if you needed any more proof that things are really getting chaotic, take a look at the volatility index. It is now at 23.79. It jumped 19% today alone. That's it for now. Thank you so very much for watching. Please remember to follow us on Facebook, Twitter, subscribe to our YouTube page, and watch our past reports at realinvestmentnews.com. I'm Mike O'Neill, and we'll see you again in a couple of hours.